Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that blood red pullback on the altcoins as well as just the kind of sideways action on Bitcoin. Guys, as we were talking about in the last episode, of course, we did have some bearish harmonics, which were trying to have pullbacks here. It looks like we're getting a double pullback, so this isn't really a type 2 reaction, but it does look like this bearish harmonic that we were looking at in previous episodes is perhaps threatening to pull back deeper. Now, does that happen or not? Is this the fake out, right, on the Bollinger Band's tightening squeeze here before we get a massive reversal to the upside? That sometimes happens, guys. Or do we just continue to squeeze to the downside? Well, as you can see, we did lose our range up here, this gray box in the background. And of course, when we lose that little range, right, that just kind of supports the little top of this channel here, then that can imply, as we've seen in the past, that we could actually drop to the bottom of that range, and then we'd have to try to find support, perhaps in that 63 to maybe 58K zone, where there's a little bit of ambiguity where we might bounce from in that area or get some type of reaction. Now, that would be the second target off of this bearish harmonic. So, if we don't find support off of this first target here, like we did back here, right, in on May 23rd, then potentially we're just going to continue to draw down to these deeper value areas where we do have a nice fair value gap, where some new buyers might be willing to step in if the old buyers are just distributing and taking profits. Since we're just in a range, we are just going to continue to play it as a range. What I would like to warn you about, however, is that volatility is quite an interesting thing, and we did have quite a big volatility wave back here. So, although we can just kind of take a look at this little local area and suggest that, yeah, what could go wrong, right? Well, maybe we could have a little bit of a local double top here, right? And that could pull us back to the bottom of that range, like I was saying, somewhere around that 62, 63, maybe $60,000 area. That would be the target off of this little local double top here. Should we break down from this area, we have not lost that neckline yet, and so this is not valid at the moment. But because we have this bigger wave back here, that does suggest that there could be an intensity to this move that, if we do continue to break down, could even bring us into the range below us, and that could see us in the mid 50s to maybe even $50,000 should this breakdown persist below that 60K area. So 60K, really 59.5 or something like that is a very important number. You don't want to be losing this kind of support that you had over here. Yeah, this could be a deviation, but really we're talking about this zone, and so underneath 59.5 and definitely underneath this this kind of wick here of 56.5, you could see just deeper pullbacks. Probably don't want to wait there until you protect your position. But if we show a little bit of a rounding here, should we have this drawdown to the lower 60s, then you might want to build a position, because we're going to be at the bottom of this range, and we're still going to be range trading. Just taking it from a perspective of fractals, sometimes when you have a V shape, right, just in the middle of your chart, often you get some type of a play in that V shape where the future kind of rhymes with the past. So before this V, we had this little dip over here. After this V, we had a little dip right here. Then we had this kind of mid-channel dip. We had this kind of mid-channel dip. And look at this one. We had a big dip all the way to the bottom of the range before coming back up. And so do we get that big dip all the way to the bottom of the range before coming back up? And does this end up creating an inverted head and shoulders, right? Which I know that Crypto Banter and some of these other guys were predicting it off of this one. That's very, Pollyannish. It's just very, it's a lot of hopium, because normally in an inverted head and shoulders, the next shoulder has to kind of match the same number of candles of the previous shoulder. So if you're just looking at this little baby area compared to this huge chunky area over here, you can't really call that an inverted head and shoulders. So of course, over at Crypto Banter, they were just projecting some type of explosion a little bit too early based upon that kind of a pattern. Here at Alpha Commission, I do use this kind of past rhymes, or the future rhymes with the past method, where I would be expecting that if we do end up putting in a head and shoulders, that probably it's most likely that we're going to get that 63 to 60K drawdown. And should we have any fake outs or anything? I don't know. Do we get a flash wick down here or something? Anything could happen. We've got the CPI data. We've got the Fed decisions coming up in the week. And so, is this just going to be that deep value area that new buyers are willing to buy and step in to replace the old buyers who are getting kind of exhausted? Sometimes charts need that. But overall, I would say if we just look at Bitcoin, this is a bullish chart, okay? I mean, look, guys, like there's nothing bearish about this. It's just we're in danger of getting to that point where we could roll over, should we lose that 60K area, and we're not there yet. Now, I know what you guys are thinking. I'm, fairly bullish on this chart. But your altcoins got decimated. Guys, I told you all the way back here. I was giving you warnings that if we had a pullback, after making this high, that any lower high, right, was going to just decimate your altcoins every time we have a pullback. The money is just going to flow out of your altcoins into Bitcoin. And that's, by the way, how Bitcoin ends up popping to the upside, okay? That money cycle from altcoins into Bitcoin is how Bitcoin then leads the way to the next stage, and then altcoins have a chance to follow. So I don't see anything wrong with that. It's only your own risk management, in that you're not having a big enough part of your portfolio as Bitcoin during Bitcoin season. And what is Bitcoin season? Of course, Bitcoin season is while Bitcoin dominance, right, is pushing up. So if Bitcoin dominance just continues to push, up and up and up and up and up, this is the Bitcoin dominance chart, then that means that it's still Bitcoin season. Why? Because altcoins don't have dominance. Bitcoin has dominance. So what did you think was going to happen when there's weakness in the charts? Of course, your charts are going to get absolutely crushed, and that money is going to flow into Bitcoin, which then holds its price levels fairly nicely. And that's what we're seeing here, right? Bitcoin's just holding its price levels very nicely. We're barely off from this little local range. We're way higher than the bottom of the range, and people are just feeling like the market's over already. Obviously there are little cracks. We didn't like impulse to the upside. It would have been very nice if we had just gotten like a nice impulse to the upside, maybe a little bit of a check back and then go. That would have been, a beautiful, thing off of that kind of bull flag formation. But there's nothing wrong with this so far. Okay, you can easily come down to this mid 60s, even wick a little bit lower, and then catch yourself and just go from there. And you still got a bull flag potentially with a nice move to, perhaps 85,000 or upper 70s, something, that breaks us out of this range. And so, guys, I don't want you to be overly biased one way or another. Just to be aware that we do have the volatility in the system now to potentially break us down underneath our range. Therefore, your stops in this area is going to be very important, and also not being too afraid, right? If you do get a bottoming structure, you also just take a chance, right? Just take a chance. It may just be another chance to buy into this market if you didn't back here. And by the way, like you can always put stops on whatever you're buying, so you don't have to just ride everything right to its absolute bottom, guys. We have not broken down from this double top, by the way, and so we cannot even say that we're going to have this little local breakdown yet. We could still bounce from right here. And let's go ahead and just take a look at what I was showing you in some previous episode on the daily. Guys, when I mark out these levels for you, you got to take them deadly serious, because these levels are really the master key to the market, and they are perhaps the most accurate system in crypto. And by the way, guys, like we would have been back here or something. Okay, we could have been on this wick. I don't know exactly where we were. Probably on this candle, because that's where my pool lines up with when I had this last daily pool. And I said, look, if we get above the volatility pivot back here, right, on the weekly, we're going to have a weekly bias to the upside, right? If we get across my add lose momentum, okay? And guys, remember, the chart looked like this, right? The chart looked like this, okay? You're saying, we're dying, we're plunging to hell, like, save us, right? Guys, the pool was right here. Get above the weekly volatility pivot, you have a weekly bias to the upside. Get above the daily volatility pivot, you have a daily bias to the upside, right? And then if you want this chart to continue, you have to get on top of the bull zone. And if you want to hold your momentum, you have to hold that 67,000. Well, let's just see what happened. How did that play out? Boom, right to these key levels. And then, of course, you have to keep these levels in mind. Once we got rejected from the bull zone and then we lost that daily volatility pivot, of course, we're probably going to recheck our lows. The strength of the move was right here at 66,000. And remember, this was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days ago, okay, that you had the key, right? The master key to this market. And look, boom, boom, right between my key levels here, right? And then the validation was basically which of these levels are you flipping. And look, you tapped that volatility pivot, you flipped the add lose momentum, and then boom, you are off to the races. Rejected, rejected, rejected. You didn't get accepted in the bull zone. You had to understand you're probably going to come back, boom, directly to that daily volatility pivot. Tap, 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 right? Trying to break down from it. Couldn't bounce back up to the bull zone. Finally, you tapped on the door enough times that it opened up, and then boom, right? We're just coming back to test the strength of this entire move, because obviously this strength of the momentum here just was not sufficient to break into the bull zone. They're going to try to find some new buyers, right? And that's what we're doing. We're going back into that buying area that sent us to Valhalla, right, from up here. And perhaps we're even going to have to get some of these buyers to join us. Okay, that's what we're trying to figure out. Well, later I gave you an update, right, with a 4-hour pool, right, back here. Let's just do the replay, guys, right? Let's just do the replay. Jump down to the 4-hour because I gave you a mini episode. Okay, and so we would have been right back here, and I was telling you guys. Okay, and I'm not trying to be cocky about this. I'm just saying that it doesn't matter how you feel bullish about the market. It doesn't matter how you feel bearish about the market. It doesn't matter how I feel bullish about the market. It doesn't matter how I feel bearish about the market. Your feelings don't matter. And so during this episode, I was actually pretty bullish. I liked that we were on an uptrend. An uptrend is a good thing, right? We were obviously challenging this resistance, and I was just hoping we could flip this volatility pivot and add that momentum to the upside for that pow, right? Everyone was. We were on a nice uptrend. But the warning here, right? The warning here was that if we lose this area, right? If we lose that bull zone, we could obviously come back and check the middle of this range. We could check our big alpha energy. If we lost our hold momentum, we could come back and check the bear zone. We could check our big alpha energy. Just that impulse to the upside, we could come back and check this area. And of course, if we lost our volatility pivot, that would also give us that bias to the downside. So the point is, like, these key levels, they don't mean nothing, right? They mean something. They're significant. As long as we're in this green area here, it's just a little bit of a wobble of the charts, no big deal. But if we lose that hold, probably we're going to drop. If we get on top of this and secure the area, probably we're going to pop, okay? And so you can take an entry on this side for the upside. You can take an entry on this side for the downside. And so look, let me just pull this over here, right? That pool would have been right there. That could have been your entry for a short. Had we gotten down here, you could have hedged along. It doesn't matter if it worked out or not, but you could have hedged it, right? And then you could have canceled it depending on which direction the market ended up going. And as it happens, right, this candle just tested the add lose a couple times. It failed it. It checked the bottom, right? It just couldn't break through that. And so it lost the volatility pivot and boom, right? Boom, it went right to the bottom of that big alpha energy right there. And that's where we started to tap on the door, knock, 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 knock. Eventually, someone opens the door, and that basically was the door to the bear zone. And so now we're in the bear zone on that 4 hour. So, what happens in a bear zone? Well, obviously, you can get pretty heavy drawdowns. So, when I give you these key levels, wouldn't it make sense to put your stop loss somewhere underneath here, right? Maybe underneath this wick if you just want to give yourself a little bit of wiggle room there. Obviously you could have had a stop loss here, right? And that would have saved you all of that pain to the downside. If we had gotten a bounce, right, and recovered that hold momentum and recovered that volatility pivot, yes, we could be talking about going to the moon. But the reason I give you these levels, right? And again, remember, we were on this candle. We were on this candle when I gave you these levels, right? That's the bottom level. That's where you're going to start suffering major pain. And so it doesn't matter if I'm bullish. It doesn't matter if you're bullish. It doesn't matter if I'm bearish. It doesn't matter if you're bearish. F your feelings. Get the key levels on your chart. Decide what type of action you want to take at these levels, right? Determine where is your key entry. Look at this short. Look at that short. That was the perfect entry for a short on this side of the pool, right? Because you want to take the far side from the direction you're going. And if you were longing, look what this perfect entry for the long would have been, right? Had it be broken out, that would have been the perfect entry for the long. These levels that I give you, I'm not joking around with it. This is the key to the market, guys, okay? And it can sound a little bit cocky to say that, but really, I mean, this is just math-based, statistics-based trading. And again, your feelings, my feelings, anyone's bias has nothing to do with it. Okay, you want a bias? Take a look at the volatility pivot. That'll give you your general bias. Okay, take a look whether or not it corresponds with adding momentum to the chart and the bull zone. That'll give you your bias to the upside, right? If you're losing the strength of your move near the bear zone, that's going to give you your bias to the downside, especially if you're underneath that volatility pivot, right? That's the pivot, right? Where all that volatility is statistically likely to get sent down if we don't capture it, okay? So that's how this system works. Guys, I'm going to give you an updated pool here now on the daily. And so again, I just want you to understand that these levels are serious. Again, we were on the 4 hour previously. Okay, we were on the 4 hour. Now we've met our target for this bearish harmonic here, right? We could have a deeper target too down here underneath our bear zone, and just understand that we could get that bigger drawdown if we get stuck in that bear zone. And so ideally, right? Ideally, yeah, we could get some flash wicks down here. We could put in a little bit of price action, but ideally, right? We just tap it and go, right? Just tap it and go if we do get into that area. That's what we want to be looking for, that bottom in the lower third of this range that we have here. And then what we want to see is us to recapture that volatility pivot somewhere around the top of this drop candle, right? Get above that hold momentum that we lost to the downside here, add that momentum above 69,745, and then hopefully this time, right? after knocking a couple times on the bull zone, hopefully we're able to be accepted in there, and then we capture this big alpha energy to the upside in order to start our next move. But why did the big alpha energy move from down here to up here? That's because we were pushing to the upside, and that's where we had that big alpha energy launching from to the upside. We had to hold that level in order to keep that energy to the upside, right? Now, where is our energy coming from? It's coming from the top down, and so of course we have to break that level. It's just common sense, guys, okay? This system, there is a method to this madness. I assure you, I am not just throwing random numbers at you guys. I did take a little bit extra time this episode to explain it. Partially because I think some people just don't understand the system. Again, I do just want to warn you that we do have the potential for that double top to kind of like play with that bear range. And if we do lose that bear range and we start getting a redistribution pattern, right, after distributing up here and we start getting another distribution pattern where we don't show strength coming out of that bear zone, then of course the bigger pattern could come into play and potentially take us lower. So this is a critical area for us, okay? That 64K, that 60K, we just want to have a nice ricochet down there if we get there. It would be nice to bounce off of this lower Bollinger Band here on the daily and just have this be a fake out and just take out that 69K. Guys, I would just love nothing more for this to be a fake out, and then maybe by Wednesday, Thursday, flip it here, squeeze on the upside of that Bollinger Band, and just give us that strength of the move to the upside. That's what I'd be hoping for. But again, F your feelings, F my feelings. The chart doesn't care about what we feel, and we just have to play the key levels. Guys, that's your alpha for the day. Stay safe and happy trading.